Thank you, Adam. As he mentioned, vaping is not only detrimental to your health, but also costly. Cash Money. Next up is Eggett from Aurora High School, who will be discussing the benefits of investing, how it has changed, and how people like you can start investing today.
Imagine it's late 2020. You're a Redditor on a social media app called Reddit, and you've just invested in GameStop as you and many other Redditors speculate and predict that GameStop stock will rise. You wait a few weeks and boom, the stock is at its highest price per share ever, rising to almost $400 per share. You sell and profit more than 25 times what you initially invested, outplaying the millionaire stock geniuses who are supposedly the best in the world at investing. This whole fiasco, having nothing to do with GameStop itself, shook the market for weeks as several factors contributed to its craziness. As you can see, investing as a whole and the stock market have almost never been more volatile ever, and I mean that. The crisis of COVID-19 has transformed what we used to know as the stock market with new all-time lows and highs in stocks that simply are wayward and almost unpredictable. Now I might be giving a speech about investing, but I hardly invest myself. Yet, one of the 4 stocks I invested some money into about a year ago has gone up by over 1,000% out of the blue with no cemented reason behind it. This is why I stress how volcanic the market can be, and this may seem frightening for a new investor, but if handled cautiously, it can be successfully done. Though if you are going to invest, try to limit yourself from these unstable stocks and stick to safer mid to long-term investments that grow solidly over time. The key in the big picture is to invest for the mid to long term safely and consistently. Plus, investing is becoming easier and easier nowadays with simple apps like Robinhood, Charles Schwab, and Fidelity, where you can complete a transaction in under 30 seconds with the click of a button, and as of now, in many cases, you can trade commission-free. Furthermore, you can grow yourself financially through the accessibility of the market and create a stable financial backing for yourself. I encourage you, if you have invested already, or even if you have, to look into what different opportunities there are out there, what you can do with them, and how you can grow yourself through investing. I mean, investing has changed in ways unimaginable 10 years ago. Even 20 or 30 years ago, the investors at Wall Street yelling at the exchanges had no idea how much it could change, as it was so different back then, even with technology beginning to be an influence. No longer do you call up a trader, tell them what stock you'd like to buy, and have them rip off a piece of paper to lock in what you want. Now you can easily, with no set deposit required, invest through an app such as Robinhood to complete a transaction within minutes from almost anywhere you'd like. And this change is astronomically supportive of new investors, as I once again encourage you to invest no matter your age, as it is full of opportunities and growth. With investing, the younger the better too, because the sooner you start investing, the more time your money has to grow and the more exponential profit you can earn. Though I do not want to discourage investing due to your age, as you can truly make profit in any amount of time. For instance, approximately 1 year ago, at the young age of 15, I asked my dad if he could open up a Robinhood account for me so I could invest in the stock market. He did, so I researched some stocks, and after telling him which ones and how many I wanted to buy, he locked them in less than 5 minutes. Within a few months of my initial investment, my portfolio was worth almost half of what I initially invested due to COVID's hard hit on the market. Yet I waited and periodically afterward looked at my stocks and told my dad to sell if it was right, and I'm now sitting at a very favorable profit. I knew this crucial piece of knowledge. You haven't made or lost money until you sell, and I believed in these carefully picked stocks, so I waited it out. Like this, I and many other investors I know have been able to accomplish investing at a young age with little hassle, with not only the accessibility, but also the right caution and sufficient knowledge of the market. The options are very diverse, with investments suited to fit almost anyone's needs. Starting with slower and lower profits, one investment is a certificate of deposit called a CD, which is a low-risk investment where you give a bank a certain amount of money that they keep for a period of time. You get your principal back after this period of time, gaining profit from interest, where the longer the period of time, the higher the interest rate. The only downside with this option is that you will not have access to your money during this period of time, unless you want severe penalties for withdrawing money. Maybe bonds, which are money loans to an entity like the government or a corporation, are for you, which give you interest based on this bond you've invested in. Although the rate of return for bonds might be lower than something like stocks, they can be much safer. Although keep in mind when investing, there are always unusual occasions like a company folding that can cause you to lose your money, so be cautious. Now, I can't talk to you about investing without telling you about stocks themselves. You can invest in individual stocks if you are looking for a more risky yet more profitable option, which can be in almost any company, or you may invest in safer stocks with decent dividend returns, being a cyclically paid portion of money to you, which can net you a pretty reliable cash benefit over periods of time. Now, yes, there are some other ways to invest, like an index fund, which is a type of mutual fund invested into a stock index, but I recommend these as they are the most beneficial, are the most general ones, and in my opinion, are the best for someone to invest in. And as I previously mentioned, investing sooner rather than later is the most beneficial and proactive thing you can do. For instance, if you invested only $100 into an S&P 500 index fund, in 30 years, you would have roughly 10 times what you initially invested. And this goes for any amount of money, not just $100. Investing for the mid to long term safely, sooner rather than later, and learning as young as possible is the start to this great opportunity. Furthermore, I want to reiterate how different this is than on previous times. Over 10 years ago, in 2009, brokerages charged people anywhere from $10 to $20 to invest online per transaction. You need to seize this opportunity now, not because it's going away anytime soon, but rather because it's so advantageous and full of newly formed potential. But at the end of the day, it depends on how interested you are in investing, and if you're willing to look into investing some yourself. The opportunities for growth are there, but you can't jump headfirst into investing without having at least some idea of what you're investing into. I encourage you to grow your money through whatever means suitable for you, but just be cautious in how you invest. As investing may seem too good to be true from how I've described it, I want it to be clear that investing does come with severe risk, obviously depending on the type of investment that cannot be overlooked. As a tip, I advise you to be mindful when investing and what you're putting on the line for that transaction, especially if you know it has fair risk. And last but not least, as investments can be risky, I will never discourage anyone from investing, but it is great to know that sometimes your best investments are the ones you don't make. Thank you.